What is important here? Is it the tone of the communique or the number of barrels of increase that we now seem to think is potentially on the table?
I think both are important. The world wants to know how many barrels are actually going to be on the market, but they also want to know whether this is all or whether there are conditions in which more oil would be put in the markets. So I think the tone and an understanding of the exact number of barrels will tell us whether the market's going to go up or down as a result of the...
Let's break that down a little bit. We wrote the story. 300 to 600,000 is what we wrote going into this. Some of your research talks about the impact of 1 million barrels. Talk to me through the size and the timing that the market can cope with, in your opinion.
So the market can cope with between 500,000 and 1 million barrels a day. There's more than that's required over the course of the second half of the year if the market is going to remain balanced. So there are so many wildcard unknowns in the market that are mostly bullish unknowns. It's not about Venezuela suddenly coming back with a lot of oil or Libya coming back with a lot of oil. It's how much more oil may be lost to the market. So the market has a sense that these wildcard risks are on the bullish side, and what is this group going to do about them?
Because even OPEC's own numbers suggest there will be a deficit going into the second half of this year. Is that the biggest market risk, supply shock outage back half 2018?
Absolutely, because we know that demand is going to go up in the summer months. If you just look at the difference between the month of May and the month of July, refinery usage rises by 2 million barrels a day. That's a bigger number than anyone's talking about. So the market's going to tighten come what may as we go into the third quarter, and the question is, by how much more is it going to tighten?
Okay, the known unknowns. I'm going to channel a little bit of politics here for you. Donald Trump sent out 2 tweets. This is the great unknown for all of us in many ways: trade wars, OPEC, etc. I chatted to Columbia University this morning. We chatted about the petroleum reserves, the special strategic reserve in the United States of America. If Donald Trump doesn't like what he gets here, could he, or do you think there's a risk that he could use some of his reserves?
There's a risk he could do that. It would be a little bit wildly political to do it right now. But if we were to see a spike in prices, and believe me, there's something really new in the market that is not being discussed here, and that is the U.S. has become the largest incremental supplier to the world markets. Last year, U.S. exports of crude oil, petroleum products, natural gas liquids, all of these things combined were about the same amount as OPEC took off the market, 1.7 million barrel a day increase. A year ago, equal to the 1.8 million barrels a day of the Vienna group. This year, the same amount is being added to the market. We have a hurricane season of any sort on the U.S. Gulf Coast. That's going to require a lot more than OPEC raising production. It's going to require a release of strategic petroleum reserve barrels. So the wild card is there, and one of the wild cards is weather and the U.S. Gulf Coast. And now that the U.S. is a really major hub for oil supply, another factor has to be considered in the market.
Okay, so it's almost as if the market is really underassuming a double punch. One could be lack of supply from the OPEC side, but also that U.S. supply perhaps dissipating due to a freak of nature.
Absolutely.
The other discussion that I've had with Bob McNally at Rapidian and indeed Columbia University was this no-Peck, this concept that not concept, it is legislation. The United States has got the ability to sue a sovereign under legislation from the late 1900s. What do you make of that no-Peck discussion?
Well, first of all, under the old antitrust legislations, it is absolutely not clear that the U.S. can sue a sovereign. I think those are 2 separable issues. The no-Peck legislation itself appears to be a threat. It's gone out of committee on the Senate side. The House is likely to be in favor of it. The president has not talked about it. Prior presidents have indicated that they were going to veto it. Those vetoes could not be overruled. And now we have this big unknown in the market. There's a long way to go between now and having that legislation actually potentially enacted.
The other comment that you made as we were getting together and chatting, you said, Manus, one conversation which I don't think has been given enough airtime is the failure, or the potential failure of petro states. And you're referring to, of course, Iran, Iraq, and Venezuela, who have arrived here very much with a no voice and a no sentiment to increase. Explain a little bit about that. Why is that so important to the market? It's important to the market because these are countries with enormous reserves. Almost half of the total reserves of all OPEC countries reside in these 3 countries. We're in an era of the failure of petrostates. If we look at the market since this decade began, it began in 2011 when Libya went offline. 1.5 million barrels a day were taken off the market.
That was the beginning of something new in the geopolitics of energy, in that 3 new sources of supply, shale in the U.S., deep water from Brazil and the U.S., and sands from Canada were coming into the market. When Libya went offline, they only added 600,000 barrels a day. This year, these 3 countries alone are adding between 2 and 2.5 million barrels a day. So there's a new factor in the market, a new cushion. It's not like opening up the taps all at once, but over time, it can take care of whatever the supply problems are that are emerging.
Let's just get a couple of levels out of you. If we see this, let's call it 500,000 barrels. That's where your and my conversation began. 500,000 barrels of additional supply. What does that do to price? Does that take? Where would that take us down to?
Okay, so let's forget about the instant reaction of traders and financial markets. That should add a good $5 to the market because it's much less than the market needs at this moment in time. If it gets to be over 1 million barrels a day of real oil, we'll see maybe a $5 drop. So we're in a fine-tuning stage right now. And the wild cards are what's going to happen to supply disruptions going forward into the 3rd and 4th quarter.
Can I ask you about Khaled Al-Falih? We just played a little bit of sound from him, sounding quite optimistic about the probabilities of getting a deal. If shale is the new swing producer on the block for us all to understand, Khaled Al-Falih in Saudi Arabia is the ultimate dial driver for OPEC. What do you make of his challenge in terms of adding supply but balancing the market?
Well, it's a double challenge. They could not do this by themselves because Russia is not part of OPEC, but Russia and the Saudis formed a joint venture partnership. If the Saudis don't accommodate the Russian requirements, and if there's a chance that Russia wants to put more oil in the market, they could. So he's got to balance what Russia wants with what other OPEC countries want. So 2 very different kinds of consensus. Very
briefly, if there was a lack of consensus, could you see a possibility the Russians going it alone and increasing production?
Yeah, they would they be riding on the Saudis? They probably would be riding on the Saudis, but the Russians have a lot at stake in this partnership because it's given them a say in something they've never taken a stake in before, namely being a price maker in the oil market. And that, on top of other strategic advances in the Middle East, is very important to them.